Picture this. You walk into your local bank on a Tuesday morning in 2008. You just need to grab some cash, nothing unusual. But when you get there, there's a line out the door. People are panicking, some are crying. And when you finally reach the teller, they look at you with that pale, trembling look and say something that freezes your blood. "We don't have your money." But here's the twist nobody talks about. They never really had it in the first place. What if I told you that the money in your bank account, those numbers you see when you check your balance, exist more as a legal fiction than physical reality? Every time you deposit $1, your bank is legally allowed to lend out 90 cents of it. The person who borrows that 90 cents deposits it into their account, and their bank lends out 81 cents of that, and so on. It's money that never truly existed until someone wrote it into existence. This isn't a conspiracy theory. It's called fractional reserve banking, and it's been the backbone of our financial system for over a century. But that raises a question that should keep you up at night. If banks can create money out of thin air, and you can't, then who really controls the money supply? The people who work for it, or the institutions that generate it with a few keystrokes? Every time you hear about inflation, or interest rate hikes, or something called quantitative easing, these aren't just economic buzzwords. They're signals flashes from the control room of the global economy. Your savings lose value when more money is created, but you have zero say in when or how that happens. Your dream of buying a house, starting a business, or retiring comfortably depends on interest rates decided by a small group of unelected officials. When banks fail, they get bailouts measured in trillions. When ordinary people struggle, they're told to tighten their belts. The wealth gap that's exploded in the past few decades, it's not an accident. It's the predictable outcome of a system designed to push wealth upward while telling the rest of us to be patient, to trust the process. The official story says central banks exist to protect us, to stabilize the economy, keep prices steady, prevent another Great Depression. But look a little closer and you'll see something else. A concentration of power so immense and so insulated that it's almost invisible. Let's pull back that curtain. Here's how the modern money machine actually works. You put $100 in the bank. The bank keeps maybe 10 of it and lends the other 90 out. That 90 goes to someone else's bank, where it becomes a new deposit. That bank keeps 9, lends out 81, and so on. Before long, your single deposit has turned into nearly $1,000 of circulating credit. The bank didn't find that extra money. It created it legally. It's like walking into a hall of mirrors. You hold one candle, but suddenly there are dozens of reflections. Each one looks real. Each one gives off light. Except in banking, those reflections turn into loans, mortgages, and investments that people depend on. The illusion only works as long as no one reaches for their reflection at the same time. When they do, like in 2008, the system cracks. The mirrors shatter. Everyone suddenly remembers that most of the money they thought existed only existed on paper. And yet, the banks aren't the final word. Because above them sit the real power players. Central banks, the Federal Reserve, the European Central Bank, the Bank of England, institutions that sound official, even comforting, but operate with more independence than almost any elected government. The Federal Reserve, for example, isn't fully public. It's a hybrida, strange creature, part government, part private. It sets the most important price in the economy, the interest rate, behind closed doors. It can create trillions of dollars with a few computer entries, and the only approval it needs is from its own internal committees. It's like having a fourth branch of government, one that controls the blood supply of the economy, but answers to no one you can vote for. Now, defenders of this system argue that this independence is necessary, that you don't want politicians meddling in the money supply just to win elections. But critics point out something else. When that power sits in unelected hands, with revolving doors between Wall Street and the institutions meant to regulate it, accountability becomes an illusion. When the 2008 crisis hit, the Fed funneled hundreds of billions to rescue banks and insurance giants within days. Ordinary people lost their homes, their jobs, their futures. The bailout wasn't for them. The deeper you look, the clearer it becomes. The modern financial system isn't just about managing money, it's about managing trust. And trust, once stretched too thin, always snaps. Because the system doesn't just create money, it creates debt. Debt is the fuel that keeps it all spinning. Governments borrow, corporations borrow, consumers borrow, and to keep that borrowing cheap, Central banks step in, slashing interest rates lower and lower. When borrowing gets cheap enough, everyone joins the party. Stock markets soar, real estate explodes, everyone feels rich, even if nothing real has changed. But it's a sugar high. Cheap money floods into speculation instead of production. It inflates asset bubbles instead of building new value. And history shows what always happens next. Rome debased its currency until the empire collapsed. Weimar Germany printed money until it was worthless. Zimbabwe made its citizens trillionaires on paper while they starved. The modern world just gave the same idea a more sophisticated name: monetary stimulus. When the pandemic hit in 2020, central banks printed more money than at any other time in human history. The stated goal was to stabilize the economy. What actually happened was a massive transfer of wealth upward. Stock markets hit record highs, while food bank lines stretched for miles. Billionaires added trillions to their net worth, while millions couldn't make rent. New money doesn't flow evenly. It enters the system through banks and financial markets, reaching the wealthy first. By the time it trickles down to wages and consumer prices, the value has already been captured. The first guests at the party get the feast, the rest get the bill. That growing sense of unfairness doesn't just show up in balance sheets, it shows up in politics. When people feel the system is rigged, when they work harder every year but can't seem to move forward, they lose faith. They stop trusting experts, institutions, even democracy itself. That's why, over the last decade, we've seen political earthquakes around the world. Brexit, Trump, populist waves across Europe and Latin America. They weren't just cultural rebellions, they were economic ones. Ordinary people felt locked out of a financial system that rewards speculation over effort, and they pushed back in the only way they could. Ironically, every time the system wobbles, the solution is the same: print more money, lower the rates, inject liquidity. It's like trying to cure an addiction by increasing the dose. For years, central banks have tried to prevent every small crisis, every fire in the financial forest. But by suppressing all the small fires, they've built up dry timber everywhere. Now, when a real blaze comes, it's not a spark, it's an inferno. After 2008, debt levels soared higher than ever. By 2019, even before COVID, the world was already drowning in leverage. And when the next shock hit, the only answer left was to double down again. More printing, more borrowing, more denial. They've built a system so fragile that it can't survive without constant intervention. Yet every intervention makes it weaker. So we come back to the question we started with: who really controls the money? The people or the banks? The truth is uncomfortable. The power to create money and to decide who gets it is concentrated in the hands of a few institutions that face little public accountability. Central banks and major financial players operate in a feedback loop where the same people who make the rules often benefit from them. We've built an economy that multiplies paper wealth but erodes real prosperity. A system where losses are socialized and gains are privatized. And yet, there's still one thing more powerful than any central bank: awareness. Understanding how money actually works, how it's created, who benefits, and why gives you the ability to see through the illusion. Because money isn't magic, it's trust. It's a story we've all agreed to believe, and stories can change. History shows that they always do, through reform or through collapse. The only question is whether we'll be bystanders when that happens, or participants in writing the next chapter.